Hello, everyone. Welcome to XM live trading session in the advanced room. It's time for US trading session, guys. So we're gonna trade US markets, but I am open also for any other instruments you are interested in. I know that some YouTube viewers are watching us, so big hello to all YouTube viewers. You guys can use the link below the description and join in our full session in xm.com, which is US trading at this point, and continue watch any other sessions that might interest you, both beginners and advanced room. Um, but that's the last session for the day in the advanced room. You're free to join on the beginners room as well. And tomorrow we will have 9 hours trading and learning all together for entire trading week. All right. So I'm starting with S&P 500 and I'm using cash because I just sometimes when I open trades, I like to hold the trades for a longer period of time. So not looking pretty much to the contracts. But again, if you are using future contracts, then you will have no swap for trading that and actually pretty much benefit from holding the position intra-month. All right. So what do we have in S&P 500 on daily chart? What's important when we are checking the daily chart is what is the general trend and what is the latest price action, plus what is the yesterday's close. We update every single um, a day, how it closes in order to understand what market is trying to tell us. What basically happens here is, well, generally saying that last price action looks more bullish than bearish, but the thing is that it created higher highs and higher lows are pretty close to each other, meaning that if we have 100 pips to the upside, more or less 60, 70, 80, 90 pips decline also against that bull impulse, it is happening here and there, which shows that the bullish trend that was forming, it's not that strong. And last price action for a year, it's mostly choppy, not very strong moving, and it's rangy. It has huge impulses, huge drops, big swings. Right now, to me, market looks like it's ranging at the top of the resistance. Well, I'm using here Avrami swing indicator to show you what Avrami swing indicator is giving us as an information, and that's mostly a bearish trending market. The reason for that is we never broke the previous highs. We stayed below that. The market is currently creating lower low or equal low. It's not that bullish. Okay, so I'm going to go for a clear and naked chart here, guys. Zoom out. Um, After having this big bearish market on S&P 500, the price stayed in a flat range for very long time, let's say since 1 year. This is end of April, and let's say early May, we started to create this big range, and there was a bullish false breakout and bearish false breakout, e.g. springs and uh, false breakouts on Wyckoff theories, if you are following. And since this false breakout from bottom, September, October double bottom, price is moving to the upside structurally, creates slightly higher than the previous one highs and slightly higher lows than the previous one. And here seems like it's failing to break the previous structure heights, pretty much respecting the resistance. What that will mean for us? How can I filter out this information using price action? Let's put a simple horizontal level of support and resistance. That's the high, and that's another peak that we can use. Why do I use that? Look at the left side on the chart in order to clear out why we can use some important levels of support and resistance currently that work strongly as resistance, 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 resistance. So that's the zone of resistance, which market never break, never washed out, never tested multiple times, but we never saw a strong, significant day closing above this previous structure high in order to say that market is really signaling for bullish trend coming. Um, and what is the pattern? Do we have a pattern? Besides that long-term 1 year accumulation phase looking like a pattern, look at this. That's pretty much as a major accumulation phase, retracing back, automation rally, spring, then market testing the resistance, falling back down, higher highs. It looks like a strong. Some traders might call this as a build-up before the breakout. So market may break, just accumulating some buy orders to break to the upside and continue to go with the bullish flow. Why that will happen? What is the first reason? Federal Reserve signaled for potential slow pause on their rate hikes. They increased interest rates with 25 basis points, which is still a rate hike, still bad for the economy, still may slow down the inflation because the debt cost rises and many other stuffs, the duration risk from the banks, and may some panic may appear also with that. But Federal Reserve signaling for pause, signaling, not guaranteeing that they will do it, signaling for pause if the data suggests, meaning then we need to keep an eye on the data. What data? Inflation data. Let's say the CPI, you can put PPI here and PCE, that indicator they pretty much like more than the CPI. And if those indicators suggest that inflation is rising, it's really strong, and it's not that much slowing down, they will probably consider another rate hike. But what about is if those data suggest that inflation is slowing down? What if we have decline in inflation more and more? Any of those data or all of those data confirms that inflation is continuing slowing down and getting close to their long-term goal, which is 2%. Ooh, that means that Federal Reserve will pause and potentially start sounding more dovish or less hawkish than dovish, than really dovish. That's the tendency that is happening. Maybe right now the pivot of Fed inflation expectations creates some emotions on the market that will boost it to the upside. That's the way to break that resistance. What will break that resistance? A lot of liquidity in the market means a lot of cash to start buying it, comes from very low CPI or inflation readings, and Fed confirming that they are done with their rate hikes, they are done with being hawkish, they are becoming a economy supporter, financial market supporter by boosting a lot of liquidity, meaning not shrinking their balance sheet, but restarting those printing money, not the way that they did, but somehow supporting the economy and financial markets in order to avoid bad recessions, for the simple fact that they increased interest rates so fast, so much for so short period of time, which will have its consequences in the future. They might think about that, and you know what? Let's not increase interest rates too much. It's too much already, but let's not continue doing that in order to not find ourselves in a really bad situation as we did before. So what have we said so far? All will depend on the data that it's coming for short term, but for midterm, what is important? Liquidity and the market sentiment. Market sentiment changes with the data, but liquidity is not changing that fast. What is liquidity? The money that is coming in the financial markets from when? From what? From who? From Federal Reserve and from currently Treasury Department. So what is important to keep an eye? Debt ceiling issue. Why Treasury Department is boosting liquidity in the financial market? Because there is issue with the debt ceiling and they cannot issue new debt to pay their old debt, and so those dramas. Why? Because there is a ceiling that is not allowing. Why there is a ceiling? As they always fixing it, as they always raising it, because this is the only good thing they have that created long time ago, and they still use it. And it's pretty political side. Those leaders right now are getting hit from the others that are using debt ceiling as an issue to attack them and to gain some political dividends from this debt ceiling issue. Who is doing that right now? Democrats are leading, Republicans are using debt ceiling issue to attack Democrats and to gain some dividends. And vice versa is happening when the Republicans are, when the president is from Republicans and there is a problem with debt ceiling issue, the Democrats are always attacking Republicans to gain dividends. At the end, they always raising this debt ceiling. But the thing is that short term, the Treasury Department must join in order to solve that problem until the debt ceiling issue is actually solved. How they do that? They have account with cash, which is called a Treasury General Account. It's the target there was, I think, $500 billion. Not a lot, but still enough. When they release that account to boost this money into the financial markets, this is adding additional liquidity, which is holding the financial market so strong. You remember then back then there was a strong inflation, there was a hawkish Fed, there was this, there was that, and market never crashed. Why? Because there was a lot of negative data, a lot of bad things, and market was staying stable. That's because Treasury General account released and the Treasury Department boosted liquidity, ironically contrary on what Fed is doing, squeezing liquidity. That's why we hold flat market. So what means that midterm, what is important? It's liquidity. Short-term sentiment, which we can read by price action and many other indicators. So what I believe that is going on here is a bit slightly lower inflation, we can say, or meeting the expectation, which is not great data that may actually make Fed change pivot. But it's good for short-term emotions. As we've discussed yesterday, market may price market may trade that inflation data with emotions. We can have strong bounce and strong drops if inflation was vice versa. But again, it's going to be short term. What is guide the market for the long term? Liquidity. That's important. So what I will do, I can buy short term when the inflation releases CPI data. So short term buy, hit and run. But midterm, I will be looking for bearish trade because liquidity is shrinking down. I'm looking for tomorrow's data that from my liquidity indicators to see if it's continuing to shrink down because it's 3 or 4 weeks already back to back liquidity is shrinking down. One of the reasons is that Treasury Department is filling back their Treasury General account, getting close to the debt ceiling issue gets solved maybe on 1st of June, as Janet Yellen said that they will run out of cash. Or if they boost liquidity again back to the financial markets, that may present little bounce. So they hold the liquidity flat, meaning that we may stay in this range for longer than expected. And what is going to be the technical pattern? What was the name of that? Diamond pattern. Break down below could be a good for sell. Break above could be a good for long. Until this debt ceiling issue, until the Fed and all the data that we need to keep an eye, that Fed redirected us traders and investors to keep an eye. That's going to be kind of a short summary that what is important for me technically, what we can trade today and by end of this week. What is happening? We are still forming. So if we can name this, looks like short-term distribution phase. You can call it a potential head and shoulder. That's the head, the left shoulder, and probably we are developing the right shoulder. No evidence, no signals for selling, nothing. I tried here, it was in profit and market kicked me out. I think at break even and maybe one loss as well. But just a choppy market, what I will be expecting here, if price holds that resistance and it's kind of chopping, giving me some bearish price action, I can try to sell it. But pattern in the pattern could be like this, small head and shoulder, confirming the big one. Okay, that could be kind of more, I am more giving weight for a sell side, like more likely to happen, but less likely to happen buy side is also the second scenario. And if I'm wrong with the sell side, I will immediately translate for look into buy opportunity. I don't have any of those. Well, some people may see this inverse head and shoulder pure technically, which is still no signaling. Well, if you miss this buy signal at the bottom, which is a pin bar at the bottom of the right shoulder or big flag pattern, then price targets are completed, key resistance being met. So what we need to do, we need to wait the market starts to grinding or show some strong trend in order to buy, in my opinion, short term, because I don't currently expect the price breaks out of this huge, strong resistance area. If it does, great news. We know which direction to watch. So guys, I am looking to answer all of your questions. That was a quick summary on what's going on with the data, what is my overall expectations for the market, and what is important for me in order to trade the markets for swing trading or midterm trading. And short-term trading, it's all pure price action. I don't think that there's better indicator than the price action for short-term. That's why we keep doing that. We have a lot of chats here, which I will start. Thanks, afternoon, good afternoon. Hey, Juni. Okay, hey, Rolando. Hey, Ioannis. Hey, Andy, Koning. I don't see something is going on. There was some